Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and of course all the strategies that you need to follow in the markets today. Remember, India's benchmark equity indices have ended higher for the second session in a row on Monday. We have managed to hold on above 24,450 odd mark, keeping an eye out on when consolidatively and sustainably we can continue to sustain above 24,500 now. Remember, the overnight cues are mixed. US equities have actually broken their 9 days of a winning streak. That was the longest winning streak that we actually saw for the US in over 20 years. The Wall Street indices did trade with losses. So the Dow Jones closed about 0.25% lower, dropping at 41,218. Nasdaq lost the most, 0.7% of a decline. S&P 500 also fell by about 0.6% in trade. Now remember, this was also largely led after Treasury Secretary Ms. Besant also did talk about how the US administration is very close to some of the trade deals right there. The Treasury Secretary has also pointed out that some deals could actually come in as early as this week, and therefore all eyes will be on how the trade talks really shape up this entire week. There is also an indication from the US that China trade progress could actually come in the coming weeks as well, and that's going to be a very important factor and a trigger for global markets and of course for the Indian markets as well. So we'll keep an eye out on that, and of course apart from that, all eyes will be on Wednesday's Federal Reserve decision, with the Federal Reserve Chair Jerome Powell expected to now stand put with as much as what exactly the interest rate talks will be concerned. Remember, we've been seeing how US President Donald Trump has been asking the US Fed to really cut interest rates to propel the economy and support the economy and the growth. Whether or not that will happen is something that we will keep an eye out on. Following this, the Asian markets also were range-bound in the morning trading session. There was an eye on trade deals. Japan, South Korea markets, however, were still closed for the holidays, while China returned after a day of holiday. We also did see Australia's ASX 200 slightly muted in trade, about 0.06% lower in trade as well. So we do have very light cues coming in from the Asia markets as well. The GIFT Nifty, although, is indicating to a positive start and above 24,500 odd mark yet again. Let's see whether that happens and sustains for the large part of the session as well. The foreign portfolio investors, if you remember, have stayed net buyers for the Indian equities for 13 straight sessions. And as of yesterday also, the quantum was less, but they bought about 498 odd crore rupees worth of stocks in the Indian markets. Domestic institutional investors, they remained the buyers for the sixth session in a row, mopping up equities worth about 2,786 odd crore rupees there. So keep an eye out on that as well. Like I pointed out, we'll look at how the GIFT Nifty is moving around 24,500 and beyond. If that sustains for the large part is something that we'll keep an eye out on. A lot of stocks are going to be in focus because of the earnings that are coming in. From the IT pack, I'll keep an eye out on Coforge. Remember, the company has reported a 16.5% year-on-year increase in the consolidated net profit. That's coming at 261 crores for the fourth quarter. And of course, what we've also seen is that the revenue from operations for the company have actually risen by 47% year-on-year to 3,410 odd crore rupees as well. On a sequential basis too, both the profitability and the revenue have risen by 21% and 4.6% respectively. So on both the accounts, we have seen an improvement coming in for Coforge. Indian Hotels Company from the tourism and hospitality space will be under watch. The Tata Group's hospitality arm, Indian Hotels Company, has reported a 25% year-on-year increase in the consolidated net profit to 522 crores for Q4 of FY25. What you've also seen is that the demand continues to outstrip the supply in the sector. Taj Hotels Parents Company has posted a 27% year-on-year increase in the revenue from operations at 2,425 odd crore rupees. So keep an eye out on that as well. In fact, when we look at the breakup, the Ginger Hotels has now crossed a 100 hotel milestone portfolio. Vivanta has crossed a 50 hotel mark as well. Now, Bombay Dyeing, another landmark company, reported its numbers but posted a decline of as much as 83% year-on-year in the consolidated net profit at 11.5 crores as against 66 crore rupees that were reported in the same quarter last year. So we'll keep an eye out on that too. DCM Shriram is another counter that you can watch out for. The company's consolidated net profit has risen by 52% year on year to 178.9 crores in Q4. The company's total income has risen to 3,040 odd crore rupees. Again, a jump from 2,555 crore rupees last year same quarter. What we've also seen is that for the entire fiscal year of 2025, the net profit for DCM Shriram has increased by 35% to over 604 crores, and the total income has risen by 11.7% as well for the firm. Now, apart from this, we'll also keep an eye out on several other stocks like Pratap Snacks for that instance, which has actually posted losses for this quarter. 11.9 crores of a loss coming in vis-a-vis 16.9 odd crore rupees year on year, although this has come down a bit. Revenue is up by about 3 odd %, so there could be some improvement seen on the stock today. CAMS is going to be important to watch out from the capital market story. The net profit here was up by 10% at 114 crores. Revenue improved by nearly 15%. EBITDA up by about 11.2%. And we've also seen that the margins have come in at 44.7%. This has slipped from the last year of 46.1%. The company has also recommended a dividend of 19 rupees per share. Apart from this, Hind Rectifiers, another solid set of numbers that have come in. Net profit zoomed by 96% to 10 crores for the company, and revenue uptake of 22.2% is what we've seen. EBITDA, operational profits have improved by 48% nearly. Margins have also come in higher at 10.7% versus 8.9% as well. So those are some of the names that we will be definitely watching out for. Signity Technologies, that's another one that we should be watching out for here. And we have the numbers that stack up as so. Profit up by 15%. What we've also seen is that 73 odd crore rupees of a profit has come in for the company vis-a-vis 63.6 crores sequentially posted last quarter. Revenue up by about 2.7% at 530 odd crore rupees vis-a-vis 516 crore rupees that was reported in the previous quarter. Operationally, the EBIT improved by nearly 6% at 81 crores odd or so. Margins also tad higher, coming in at 15.3% versus 14.9% in the previous quarter. So that's something that you can look at. Now, as far as the business updates are concerned, IEX from the power and electricity space also came up with an update, sharing that the traded electricity volume was up by 26% year on year, coming in at 10,584 MU. Day ahead market, that is DAM, volume was up by about 3% year on year at 4,231 MU. What we have also seen is that the real-time electricity market, or the RTM volume, was up by about 48% year on year as well. And what we've also seen is that the clearing price in DAM was flat year on year at 5.2 rupees per unit. So that's something that we can keep an eye out on. Bajaj Consumer, another one that you could look at. Q4 earnings did show a net profit that slipped by 13% to 31 crores odd or so. What we've seen is that revenue, however, improved by about 4.4% at 250 odd crore rupees versus 240 odd crores. EBITDA down by about 8.3% at 32 crores, and the margins coming in at 12.7%. This has also fallen on a year-on-year basis. So that's something that we will definitely keep an eye out on as well. Let's look at how the markets have opened in the pre-open trade. 24,461, tad lower than what the gift Nifty was indicating. We've quickly slipped into the red right at the pre-opening tick that we are seeing, 24,433 at this point in time. Let's look at how the Nifty Bank is indicating a start. Remember, Nifty Bank, private banks, those were the only pockets that were seen pulling down or kind of capping the upside for the markets as of yesterday. So let's look at the Nifty Bank and several other stocks from that basket. Remember, HDFC and ICICI, they continued to support the markets yesterday vis-a-vis Kotak Mahindra Bank. So let's pull up all these three stocks, ICICI Bank, HDFC Bank, and also Kotak Mahindra Bank, to see what the variation persists. Now we have slipped below 24,400 mark in the pre-open trade as far as the Nifty is concerned. We are now down 0.36% as well. The Sensex is down by about 600 points. But let's look at some of the key stocks that you can watch out for in the morning trading session as well. Let's look at a few stocks. Polycap is opening about 1.5% higher. We're looking at KEI Industries from the wire segment, also opening a tad higher in trade. Within the banking space, let's look at J&K Bank. Remember, the management will be with us shortly. Robust set of numbers coming in for the bank for the quarter. But what remains to be seen and what we will be asking the management to find out is what will be the impact and what has been the impact of the terror attack at Pahalgam on J&K Bank. 1.6% higher at 97.9 in the pre-open trade. So that's something that we will watch out for from the banking space today. 81 points lower now, 24,388 right now for the Nifty. So we are swiftly coming under pressure as far as the markets are concerned in the pre-open trade, but it's very, very volatile at this point in time. Let's pull up on the large banks, ICICI, HDFC and Kotak Mahindra Bank, to see how the stocks are moving. Meanwhile, the rupee has opened at 84.25 and 84.28 versus 84.25 today. So keep an eye out on that. There is a 3% weakness, 3 paisa weakness on the rupee today. The banks are opening on the back foot yet again. ICICI Bank now opening 1.4% lower at 1410. What we are also looking at is HDFC Bank, however, still continues to pull up, 0.4% up in trade. You can see a 1945 kind of a level on that one. Let's look at IT names as well. Coforge, for instance, that's the first one that we will be watching out for from the mid-cap IT space. That's showing a smart move in the pre-open trade, 4.2% higher. That's something that we will watch out for because that's again going to be shaping up a move. Remember, Yes Bank is in focus. There is an indication of a near 10% move on the stock. There is some kind of a report that Japan's SMBC has got the RBI nod to acquire Yes Bank, and therefore you can see about a 10% surge that could be coming in on Yes Bank. That's another one that we will for sure be speaking to, the kind of move that we can expect on Yes Bank. Now, a lot of retail investors' money is stuck in Yes Bank for a long time, and let's see whether fortunes are going to change for this beleaguered firm as well. Let's look at the auto space. Remember, auto space was the one that drove from the front, was leading the way yesterday, especially stocks like M&M for that matter, after the earnings that pulled up the entire space. So M&M, Tata Motors, Eicher Motors, the two-wheeler makers. So there's another 1% uptick on M&M today. We'll look at how that one shapes up. Even though Tata Motors is slightly soft in trade, that's something that we will be looking at. Remember, oil stocks is another one that we should be definitely looking at. Yesterday also there was a lot of move on the oil marketing companies, IOC, BPCL, HPCL. 4 to 7 odd % of a move was seen because of the lower crude oil prices. Even some of the gas stocks like GAIL and IGL, they moved up in yesterday's trade. But let's see whether that momentum continues. There's been just a slight uptick on the oil prices from yesterday till today, but still around $60, $61 a barrel is what you see. The crude oil prices really trading at around at this point in time. Remember, OPEC Plus has agreed to production surge in June to increase the output by 4.11 lakh barrels per day, and that's something that could be important to track as well. We'll welcome our guest on board. We have with us Mr. Dharmesh Kant joining in on the show with us to discuss and decode the market momentum from Chola Securities. Warm welcome to you, sir. Thank you so much for joining in. Your sense on the markets here, yet again, we are seeing some statements coming in from the US that trade deals could be probably coming in the coming weeks itself, even with China. That's what the indications are coming in. Do you think the worries on the back of steep tariffs and a trade war and a tariff war are now probably behind us?
Yeah, good morning, and good morning to all of you. It looks like it's proceeding in a good direction as far as negotiations are concerned, but at the same time, there has to be some tariff. So the factor that cost will be increased, there will be some inflationary pressure going forward. I mean, from June onwards is likely to be there. At the same time, the extreme measures, the discounting on the earnings and everything which was done. So market also pulled back from there. So it's now, I think the market is back to normal with the expectation that some impact on cost will be there, and it's evenly balanced because all the markets across the world, if you see, they have rallied more than 10% from their bottom. So tariff war and trade war, I think, looks to be on sidelines now. The worry is more on the geopolitical issue on the border front, and that is why we are not seeing a good catch up in our markets. And secondly, that's factor number one. Factor number two is the earnings, which has not panned out so good. There had been few outliers, but barring the outliers on a broad basis, on an aggregate basis, it's around 6 to 7% kind of an year-on-year growth as far as quarter-on-quarter growth. Both are in the same lines. So that's the worry. Let's see how things shape up. With a accommodative monetary policy in place and falling inflation, prospects of good monsoon, I think these are likely to balance it out. But net, as of now, till this geopolitical issue on the border gets sorted out, I don't think market is here in for a directional move either ways.
Okay, got that. Dharmesh ji, before we come back to our own markets and specific stocks and sectors and earnings impact, I wanted to also discuss this week we are looking at a major US trigger, and that's the US Fed policy meet yet again. What do you think will be the key triggers that one should be really looking for from there? And is it going to be, really important for even Indian investors to track this time?
It's likely to be a non-event. Market is
Okay.
going with a consensus that there won't be any rate cut. And look at the US, the ISM manufacturing data, and the data point is pointing strength in the economy. Even the jobless number which came, so unemployment rate is 4.2%. People are expecting it to aggravate to 4.3. It did not happen there. At the same time, inflation in US is, as for last reading, it was contained at 2.4%. So, and the tussle has happened between the Fed chief and the US president. So, if he cuts rate, it will be indicative of giving in to external pressures, which I don't think is the likely scenario. At the same time, there would be enough elbow room for US to cut rates going forward if it is warranted in US economy. Keeping that in light and seeing our currency, how it has been appreciated over last couple of weeks. Now it's up against US dollar by more than 1.3%. So that's a huge appreciation which has happened in the INR, which gives enough elbow room to our policymakers to have rate cut with a falling inflation trajectory. Even our inflation CPI has come to 3.4%. So that's very much in line for a accommodative and rate cutting policy. So even if there is a status quo, I think it's good for our side, whether there's a rate cut or no rate cut in the US. As far as the language is not hawkish, will be good for the overall global equities. ACB has already done the rate cut. Everyone else is cutting the rate, and so is expected from the RBI. So that way, I think macroeconomics seems settled for India's perspective.
Got it. That's as far as the US setup is concerned. How about the change of heart that you're looking at on the foreign investors' part, sir? I think consecutively for the 13th straight session, we are seeing them pour in money in the Indian markets. The quantum has kept on changing, but they are slowly and gradually, pouring in confidence in the Indian markets. Are they back for good? Is this just a tactical position that they're doing at this point in time? What exactly should one read through the fine print?
Definitely it's a tactical position and there is no overweight on India. It's basically the emerging market allocation which is coming back. So that share of pie on the proportionate basis is also coming back to India now. There has been no selling as far as, that's a good point. If you look at the flows, they have been very, it's not in a linear fashion. It's more of sometimes it's a good flow, sometimes a smaller flow. But fundamentally, I think the shift is happening towards the emerging market. Chinese economy delivered a very good, GDP growth in Q1 of 5.4%. So keeping that in light, in India is above 6%. In the worst case scenario, it is 6.1 to 6.2% kind of a real GDP growth for our country, which should be the best in the any meaningful economy of the world. And at the same time, US after the recent, catch-up rally which has happened post the Liberation Day. So now they are very, looking expensive. Most of the US companies are not giving, guidance. So they are also worried about their own. And in the short term, it was about to happen. So that is, I think, a needle moving point. US being at, peak valuation multiples with slowdown in the economy for certain in the near term. At the same time, economies like India and other emerging markets, including China, relatively better off. So the flows will be there, and that provides a flow to our market as well. So DIAs have been buying. FII is again buying. We have seen some selling, tactical selling from the HNIs, large groups, just because of the geopolitical issue which has been there. One more week or so, I think even that will settle. So again, that's a big, indicator which you have pointed out, a positive factor for our markets.
Okay, got that. Let's come to a few stocks then and the sectors as well that we need to discuss with you. First up, let's discuss the banks, especially with the kind of numbers that have come in, private vis-a-vis PSU banks that are coming in right now. So far, they have been leading with the front, with Kotak Mahindra Bank and SBI falling slightly short of expectations. There's been some dampener that has come in again. What would your fresh expectation and strategy be on the banks, sir?
Sakshi, if you look at banking numbers closely on standalone basis, they are not great. But if you look at in relative comparison with other numbers which are coming out, they look better off. Even in private sector banking space, HDFC Bank, it was a muted kind of a profit growth. ICICI Bank, which was used to 25-30% kind of a profit growth year on year, a couple of years back, has fallen down to 12 to 13% kind of a growth. Axis came out with sub 10% kind of a profit growth. So these are three large, private sector banks which are delivering near about double digit kind of a PAT growth. So that's one, cautionary factor. SBI numbers, was not that great. Compression in NIMs was also seen in the Kotak Bank numbers of 30 basis point along with SBI. And SBI, the provisioning was far higher. So large banks have not been doing so well in the present context. ICC looks better off because compared to others, their numbers are a tad better, but not in line with what they used to deliver the set of numbers. So there's definitely a caution in the market. One thing was very clear, corporate, investments are not happening because corporate advances were a mid-single digit kind of a growth. Retail, home and, credit card division, which was doing well, again got suppressed. And MFI, stress has been increasing. You have to look at the Utkarsh Bank numbers. That was horrible set of numbers which they gave. So net to sum it up, I don't think it's a very clear runway for the banks as of now. Though the interest rate down cycle is there and forecast of a good monsoon is also there. But at the same time, let's not forget they are trading at peak levels. So valuations have now being better off. They're healthy. Richer valuations rather than a mean normal valuation which was there. I think for next couple of months, it will more be a wait and watch on banks. It's not a sell call on banks, but it definitely not a investment buy at current levels. So let's see 2 months how things shape up. And then only a banking sector call can be taken. So to my mind, if you're invested, stay invested. No fresh deployment of money to be there in the banking space as of now.
Okay, just very quickly before the markets open on Yes Bank, what's the stance that you have, sir? There are some news reports which are unconfirmed by us that are indicating that Japanese financial conglomerate, the Sumitomo Mitsui Banking Corporation, has actually looking at acquiring a stake in Yes Bank, and they have also reportedly talked about how they have got the permission from the RBI, and we are looking at an opening with a 9.5% up move on Yes Bank with that front. Would you look at Yes Bank afresh with that move or expectation?
Yeah, definitely from a trade perspective. And see, numbers watch pretty good. They have already doubled their profit when they reported with fairly largely stable asset quality and business have been doing pretty well for Yes Bank. They have done a lot of, shift and recalibration of the top management. The executive top management, a lot of changes have been made out there. And Sumitomo was the front runner as far as the grapevine news flow issues goes. If it happens, good for Yes Bank. SBI can also get an exit out there. At the same time, the only problem, Sakshi, is the book. Equity is so big of Yes Bank. So valuation wise, there's not much of a, headroom out there. So maybe 25, 27 in this momentum run up, it can still go. But beyond that, and then again, earnings and everything has to catch up to justify the valuation multiple, just because of the large equity base they are sitting on.
Oh, okay. Let's look at the market opening, sir, and we'll come back to our conversation. 24,478 right now. There's an 18 point of an uptick, so slightly better off than how we saw the trade settle in the pre-open space. So we are mildly up into the green, just about 0.08% on the Nifty. When we look at the Nifty Bank today, you will be able to see that the Nifty Bank is slightly higher in trade, and we are seeing about a 0.1% up move on that front too. Barring the pharma and consumer durables, rest of the sectors have actually opened in the green, with large motions being seen on IT, auto space. You can actually see private banks, PSU banks, real estate as well, all up and about in trade. Largely those rate sensitive names also buzzing. Let's also pull up some stocks from the Nifty basket that are doing very well. You can see M&M that continues with its up move from yesterday after the earnings. You are about to see a 2.5% up move on this one. SBI Life Insurance, ONGC is recovering from trade yesterday. Hindalco, Hero Motocorp, those are the pockets which are doing well on the Nifty. On the laggard side, it's pharma that's actually not doing well. Cipla down by 2.5%. Dr. Reddy's, Sun Pharma also down. So out of the top 5 losers, you have pharma stocks that are dragging. Apart from this, Maruti is also softer, and Reliance Industries is somehow giving some gains of the recent past. You can actually see a 0.5% decline on that front. The PSU index as a whole is up in trade about 0.3%, but slight moves that can be seen here are on BEL, on Concor, on GAIL, HAL. So some defense moves that are coming in strong. But auto and IT seem to be the top sectoral movers. On the F&O space, Yes Bank, like we pointed out, is the top mover. Coforge from the IT space after earnings is also up by 5%. Let's also look at the top gainers in the Nifty 500 basket. You can see CCL products. I think earnings move there. You have DCM Shriram, 9.5% up move on that front. Unicommerce Solutions, E-Solutions, that's a recently listed stock, again 8.7% up. Tattva Chintan Pharma is up by 9%. You have Hind Rectifiers, again earnings move 8.8% higher. Yes Bank, the news flow that we have suggested to you, 7% up. Ami Organics is also moving up smartly. Signity Tech, again earnings move 6.5% higher. You have Swan Defense, Coforge earnings impact that's pulling up the market. So you do see a lot of stocks that are reacting to positive earnings in trade today, whether it's in the main indices or in the large caps. Okay, now let's look at the markets yet again. The Nifty has slipped into the red, and swiftly we are seeing a lot of sectors come under pressure. Very, very volatile trade right at the opening within minutes of trading. Pharma index is the one that's under pressure. It is down by 1.8% now. Consumer durables have lost about 0.5%. Realty, oil and gas, banks have now slipped. You also have metals, broader markets, both mid and small cap slipping in trade, and the metal stocks also slightly lower in trade as well. So only auto, IT, FMCG and private banks right now remain into the green at this point in time. There may be very, very volatile set of trade that's taking place right now. What do you think is the key reason why the markets are unable to go higher and cross over that resistance beyond 24,500? What will it take for that sustained move upside? So we are actually stuck in a range from last 2 days, at least what we are noticing. We are not seeing that the bulls are letting go of the supports at this point in time, and at the same time resistance are also firmly placed. Very, very narrow band, volatile trade is what we are witnessing from last 2 days. What do you think is the key reason for that, sir?
See, actually, market is always forward-looking. So, given the set of numbers which came through, and I mean, good numbers always come early, and then you have the weak numbers coming through. So, given the fact that we are already standing on 6th of, May, so and almost we have studied 170, 180 companies which have reported the numbers. So, going by that, the fair value-wise historical basis, the Nifty should be anywhere between 23,500 to 24,000. So, that is where it should be standing. But the macro indicators and the good factors is one is the interest rate cycle, which is already underway, and we are expecting further 25 basis point rate cut to come through in the coming policy meet. And good monsoons, these two can help to the market to stabilize there and walk up forward. Secondly, the tariff, when it is settled, it will have a clear chart to the, and then the companies would be able to come up with guidance which they have not done this time around. Some more positive vibes can come through from that. So that will help the market cross this resistance level of 24,500 to 25,000. But what can add to be a, catalyst to all this is settlement of the issue on the border which is there. If that settles down, then I think, hot monies and the aggressive investors and traders will actually jump into this market because there's not much negative left in this market. Now you have only a positive directional flow to take place. When it will happen, how long it will take, only that's subject to judgment. Otherwise, the base of, the weak numbers which we have seen, I think worst is now likely to be behind us.
Okay, got that. So that's as far as the market overall expectation is concerned. Now let's talk about auto space that has been coming back in full flavor. We've been seeing earnings momentum, we've been seeing mergers, acquisition take place, and of course the lower tariffs expectation that we have. Are you again fresh looking at the auto pack? If I have to ask you, what would your top bets be at this point in time? How would you really look at both four-wheelers, two-wheelers at this point, sir?
Yeah, so as far as four-wheelers are concerned, last time also when we discussed about M&M, they have come out with a stellar set of numbers, and I think that company will remain an outlier in this space. I mean, they will continue to outperform the market because all their verticals are firing, be it EV vehicle or SUV segment, and they have recently acquired Assembly Suju, which sits in favor of M&M if you look at it. That gives a further portfolio, range to the M&M. Valuation wise, it's now becoming a bit, on a tad on a higher side, but still it has room to go. So, 10% up move from here in a short span of time, maybe before Q2, is very much on the card. So that is the top pick out there, followed by Tata Motors, which has been bitten out of shape. And now, since they will be shipping back to the JLR vehicles to the US, it's a good news on that count. And if some settlement happens on the tariff count, it should power well for Tata Motors. But that's a catch. It's subject to the tariff, how it gets settled for them. Then it should find traction. Maruti Henry, we are avoiding as of now. Two-wheeler space, avoid as of now. Not much out left there.
Okay, got that. Now, apart from this, let's also focus on one more aspect, and that's the oil and gas space. Again, a lot of moves macro basis that we are seeing, Mr. Kant, and that's as far as how the oil prices are ebbing lower, and we are again going to be seeing some supplies glut as well. How should one retail investor be looking at both the oil as well as the gas names at this point in time? OMCs vis-a-vis the upstream makers as well as the gas names?
Very volatile and riskier trading bets to take there. As far as fundamental long-term investment is concerned, I don't think, be it upstream or downstream, there's no merit investing in that space because to my mind, renewable energy is the way forward. And volume-wise, we have not seen much last traction out there. So going by the way EV adoption is happening worldwide and eventually even industrials where they are still supplying more. Even they would be adopting to the renewable energy part of the segment. So there's no volume growth. So whether it is upstream or downstream, you don't have a 5-year, 10-year kind of a horizon for the investment perspective. Trading point of view, you can still, do your picks in between. But that's subject to trading. I mean, I'm not a very good expert in short-term trading, so difficult for me to judge whether one should be buying there or not. Fundamentally, space, we are avoiding it, except Reliance Energy. So Reliance Industries have a different story to play out. So that's the reason why that's in our buying basket, but none of the upstream and downstream companies.
Okay, got that. Reliance Industries particularly, I just wanted to ask you again, we had been discussing this stock on the way up as well and the recovery that's taken place thus far. do you think one can safely look at Reliance Industries probably looking at a multi-year kind of a move in FY26, a re-rating candidate in FY26? We do also expect a lot of buzz on the IPO front. Once that happens, do you think that kind of a trigger can really lead the stock prices much higher from where they are currently, sir?
Definitely, it's a multi-year kind of an outlook holding. Re-rating, I don't know whether it will happen in FY26 or FY27, because to me, the next re-rating candidate is the new energy segment. So digital has played its part, it's showing the way forward. I mean, it's the maximum profit contributor to the Reliance Industries. Almost 33% of the PAT comes through the digital space, and which earlier used to be your refining and chemical space. So that has gone down. At the same time, retail has picked up. It's hovering around 10% kind of PAT contribution. But going forward with the foray into jewelry, garments, and other products, cosmetics and all, so that will also start delivering. So I think retail will again go back to 12 to 13% given the muscle power Reliance has.
Okay.
Now this new energy is one segment which can be game changer for that. But for that we have to wait for FY27. So our SOTP based target is 1600 for Reliance Industries.
Got it. Well, I also wanted to get a sense, Dharmesh ji, from you. As far as the IT pack is concerned and Coforge earnings, how would you look at that?
See, Sakshi, IT, I am not a buyer. I mean, there are few outliers out there where earnings have been good and the stock has been doing well. But at the same time, as a space, so with, I mean, all the leaders, not very confident about the outlook. Even US companies themselves are not very confident. So why to jump the gun as of now? And Indian IT companies, Coforge is not that case, but barring Coforge, the Indian IT companies have way to go to catch up with the AI and the other disruptive advancements which are happening across the globe and with this uncertainty. So I doubt whether they would be able to deliver whatever they have said in Q1. So I mean Q4. Q1 and Q2 would be very difficult for IT companies.
Got that. Dharmesh ji, we will thank you on that note for being with us on the show and helping us
Thank you
navigate
so much.
through all the fresh opportunities in the markets. Hope you have a fantastic time till the time we see you next on air on Business Today Television. Viewers, it's now time to really look at some earnings conversation, and we are going to be looking at Jammu and Kashmir Bank. We have with us the management of the bank, Amitav Chatterjee, MD and CEO, now joins in on the program to discuss the earnings. Earnings have been robust this quarter, and we will be coming to talk to him about the numbers and the outlook as well. But before we start to discuss our discussion on the earnings, sir, I want to say that the nation really is standing with solidarity with you, sir, at this very, very tough hour. We have seen a horrific incident take place in Pahalgam. And we are with you, sir, in this very, very tough time. And we hope things turn out to be, much better from where they are, situations to improve much sooner than we expect, sir, on the front, sir. So we are with you with your personal lives, your families and your all the employees of J&K Bank. We are with all of you, sir. So thank you so much for taking the time out, for being with us. Also, just wanted to say, sir, that, we are talking about a lot of impact of what the terror impact that could be. But despite that, we've actually seen very strong numbers coming in from you, sir. Help us understand first what exactly, do you think are the key drivers for the quarterly numbers that have come in, sir?
Good morning. Thank you very much for the wishes, and it has been pouring in from the entire country. The entire the state, the people of the state are very, very thankful to everybody around. As far as the impact, if you want to ask me the impact on the
Yes.
bank, I would say the impact of this incident on the bank is very, very nominal. The total exposure of the bank to the tourism industry in this geography is only 1% of our total portfolio. So, and historically, you would agree that these kind of incidents have always been taking place in this, and the bank has always sort of been protected because of essentially because of the resilience shown by the citizen here and the propensity to repay. The I think uh, the the maximum stress that the bank has seen in this book, that is the 1% of the total portfolio, has been 14% of that 1%. So, and
Okay.
that too only for a couple of years, and it has come down to 2 to 3%. So overall, the impact is very, very nominal. Yes, the indirect impact I can say, because tourism contributes to 8 to 10% of the GDP of this state. So there will be impact on other sectors. So that might indirectly impact. That will we will have to wait and see.
Okay, sir. So just a minor 1% impact because of this incidents you are saying. And you've also mentioned that historically such incidents have largely led to a 14% of that 1% impact that we see. That's what you're mentioning, sir. So
Yes,
the
yes, yes.
impact is minimal at this point in
Minimal,
time.
minimal. Yes, minimal.
Okay, sir. Sir, how long do you see the impact continuing for the next couple of quarters? Do you see pressure continuing?
See, if you look at this economy, major part of the economy, the GDP is dependent on agriculture, and agriculture won't be affected by such incidents. So, and over a period of time, this bank has been very strong in supporting the economy of this state. So, that way, I don't think business is going to be largely affected. But yes, tourism is going to be impacted to a large extent, as it is visible at the moment. What I feel is there is one event that is coming up, that is the Amarnath Yatra. Once
Yes.
that is successfully conducted, I believe tourism will come back. So yes, on the tourism front, I guess 1 or 2 quarters will be affected. But since for the bank, I would say that since we are present across the country, we are also present in 20 other locations. So the business for this bank would not be that much affected as one would like to believe.
Can you give us this clarity? How much of your overall business comes from J&K and how much from the other locations, since you're saying 20 other locations is what you're present in? If you could just understand.
See, on the deposit side, it is 80-20, but on the
Okay.
advances loan book, it is 67-33. So 33% comes from rest of India.
Okay. Uh, do you think from now onwards the bank's focus will also be to build the non-J&K business more, sir?
It will be, see, not because of this incident. It will be because we need to diversify and balance it out.
Correct.
Concentration risk is something which we will always be looking at. So if we can diversify and I mean expand in the geographies outside this state, it will be beneficial for the bank as a whole.
Okay. So also just one more point to understand, as far as the tourism aspect is concerned, sir, how much of your business is dependent on J&K tourists and how much is it from the domestic or the residents?
I told you, I mean, currently the bank's business is only 1% of the total
1%.
portfolio. Only
Okay.
1%.
That's it. Okay, got that. Now help us understand, sir. You've actually posted robust set of numbers. We've seen an 8.5% uptick on your profitability, a 13.3% uptick on your NII as well. What can we expect for FY26, sir, vis-a-vis FY25 on the kind of growth that you may be penciling in for yourself?
See, deposits have been under pressure for the entire banking industry.
Yes.
So I would be happy to have a double-digit deposit growth this year.
Okay.
I have witnessed a fair bit of appetite for term deposits in the last quarter of the last financial year. Essentially, I would believe that it was because of the fluctuations in the capital markets. Uh, in the on the advances side, I would believe that 12% growth for this coming year would be fair. And in case business as usual returns to Jammu and Kashmir, it would be more than that.
Okay. And what about your overall AUM, sir? What is the growth you're penciling in there?
Uh, in fact, we are at the moment we have crossed 2,50,000 crores of business. So I would be looking at somewhere around 275 to 280.
Okay, okay. So about say 11% or 12% or kind of a growth there,
Huh.
sir.
10 to
Okay.
12.
10 to 12. Okay, okay, got that, sir. Now, sir, on the NPA front, we have seen again an improvement on both gross NPA and net NPA front sequentially, sir. Are there any levers, room for improvement from the current state, or are you comfortable with this level on the asset quality, sir?
So there's a lot of room for improvement. In fact, what we are looking at
Okay.
NPAs by the end of this year should be below 3%, the gross NPA, and the net NPAs we intend to bring it below 50 bips. So that
Okay.
is the target. In fact, it should be better than that, but I am keeping it conservative because at times you never know, there are I mean, shocks coming where you do not expect the shocks to come from. But
Absolutely.
uh, overall, I would believe that the gross NPAs will be less than 3% and net will be below 50 bips.
Okay. Sir, on the CASA deposits, sir, it stood at 47% at the end of the last fiscal year. Do help us understand how do you see that moving forward?
See, two aspects to it. Yes, the negative side is we have come down from 50% to 47%. So that is the challenge we have had. But that is not only for our bank; it has been for the
Yes.
entire industry. The CASA has been going down. The positive side is this bank has been a little bit late in introduction of technology. Now that we have introduced technology to a large extent, that definitely is going to help us in garnering more CASA deposits. In fact, uh, providing all those technology related services to the depositors. So we, although there has been a slight growth, the ratio has come down last year, but the CASA has not gone down. So I believe that we can take it up to 48% in the short term.
Okay.
Again, our aim would be to get back to our original rates ratios.
Absolutely. Absolutely. Sir, help us understand on the demand scenario for the credit at this point in time. Geographically, where is it stemming from? Sectorally, where is the large amount of demand coming in from? And how is the scenario going to pan out for the rest of the year, especially keeping in mind that the rate cut cycle has begun? We've already seen, 2 rate cuts happen, and there is an expectation that it could continue going forward, sir.
I would explain it in two aspects. One
Okay.
is within this geography, the appetite will continue. The kind of appetite that the UT of Jammu and Kashmir and Ladakh they have, that is going to continue. There won't be any change in that. I mean, it is agnostic to rate cuts and agnostic to what is happening globally. Now, on the other side, uh, our exposure to the sectors which will be impacted by the global fluctuations is very very low. I mean, we have exposures only to the sectors which will not get impacted by those. I mean, being a small bank, that is a I mean, I think it's an advantage for us. And considering the fact that the portfolio outside Jammu and Kashmir is still not very large enough to be impacted, and our exposure to the sectors which are agnostic to these fluctuations, I believe there is a huge potential, upward potential for us to improve our businesses outside. So uh, I do not believe that this bank's business will be impacted in any way.
Okay. So also on your margins, your NIMs as well, where are you standing at and how do you see that progressing for FY26? Is there a band that you're looking at that you'll be comfortable with too?
There are only few banks which would have maintained the NIMs for last year, right? So
Yes.
we have been able to maintain that NIM. Uh, Going forward, looking at the rate cuts and the pressure on deposits, I do not expect it to be near 4%. I would be happy to be at around 3.7, 3.8.
Okay, got that. Sir, yet another historic performance from you on the net profit front. In fact, it's a hat trick of historical profits on an annual basis that you have posted. So 2082 odd crores is what we are seeing already. Year on year growth of strong, in this space again. What is the expectation now for FY26? We are going to be seeing another historic year from you.
obviously the bank sets its own parameters and feels good in breaking those
Yes.
targets. Uh, so I
So are
on
you
cricketing,
going to give me a conservative target, sir, or are you going to give me an ambitious target now?
no, I don't see any reason why we should be anywhere less than 2,500 next year.
No, not less than 2,500 next year. Okay, sir. Thank you so much for being with us on the show and helping us out with all the details on your bank's earnings and the outlook going forward. I wish you all the very best, sir, on the quarterly front, and we will see you very soon on Business Today Television for another chat, sir. Thank you so much for
Thank you.
sparing time for us.
Thank you very much. Thank you.
All right, that was Jammu and Kashmir Bank's management right there talking about just a very minimal marginal impact of the Pahalgam terror attack, although things could be under pressure for the next 1 to 2 quarters. But the bank remains confident after posting a hat trick and 3 consecutive years of historical profits on an annualized basis being seen. The next time around 2,500 odd crore rupees of profitability and not less than that on an annualized basis is what the bank really expects to get. Although they are saying that they have always had the habit of beating their own guidance. Let's see how things progress. Of course, a lot also depends on how things progress on the geopolitical front, and once things sort out pretty much soon, then the bank can actually post much higher numbers than they own expect right there at this point in time. So we'll now look back at the markets yet again. 24,450, a choppy start. First half an hour has been extremely volatile. 24,445, lackluster kind of a trade. Auto stocks continue to soar with Mahindra and Mahindra now up 3.5%. Hero Moto, Eicher Motors, Bajaj Auto also following suit. We also have Bharti Airtel now above 900 odd levels, 1900 odd levels coming in. Apollo Hospitals is another one that's also taking on the higher side. On the lower end, however, it's Jio Financial Services that has now slipped nearly 2% lower, apart from the pharma names. Eternal, Zomato, keep an eye out on that, 236 odd levels. In fact, let's also pull up Swiggy. Yesterday, Swiggy had moved up 11% odd in trade. Let's see whether it is sustaining the momentum or has given up some of the gains there. Slightly lower, about 2% odd or so after that very strong surge yesterday on the back of Bolt, their quick commerce space also moving in very, very smartly. Now, FMCG, IT, metals are the other pockets that are holding up. Yes Bank, Coforge, M&M, these are the other stocks that are moving in the F&O space today. And on the losing side, you have Cummins India, that's down by 5.5%. You also have Oro Pharma, Petronet LNG, Lupin as some of the counters that are dragging. Let's look at the Nifty 500 basket as well. Strong moves on CCL products, 14% higher. Tatva Chintan Pharma, 13.7% up. Unicommerce e-Solutions, 13% higher. DCM Shriram Hind Rectifiers up by 8 to 9 odd percent. Ami Organics up. Tejas Networks is doing very well. So Bharti Airtel, Tejas Networks, keep an eye out on the telecom basket, viewers. Yes Bank is moving. News flow there. Swan Defense is moving. You also have Signity Tech, Poly Medicure from the healthcare suppliers space that's also moving up in trade about 4.5%. Pukarna from the defense space is also moving up. Within the Nifty next 50 names, you have names like CG Power, United Spirits, TVS Motor, HAL Dabur also moving up. So some FMCG names also. Yesterday it was Marico that was pulling up. Now you have the rest of the pack that's pulling up too. From the capital markets or brokerage or NBFC space, you have Muthoot Finance that's up. Relicare, Sundaram Finance, Spandana Spurti, these are the pockets that are moving up in trade. Well, apart from this, let's also look at some of the other aspects. Some moves on the metal steel space that we can see, 1 to 3% odd. Defense space, you have Zensar Tech, Solar, Paras Defense, HAL, BEL, BEML also moving up in trade. Forging companies, Kalyani Forge, Ganga Forging, Happy Forgings also up in trade. Autos, like we have pointed out already, those are the big movers today. and of course at least making a part of the top 5 movers on the Nifty as well. But some IT names also that are pulling up. If you look at the kind of moves that we are seeing, Coforge of course is leading the pack with 3.7% moves. Persistent follows, Wipro, HCL Tech, Tech Mahindra, LTI Mindtree, that's another one that's also moving up at this point in time. All right, viewers, we'll wrap it up at that on Business Today Television in the morning edition, with first half an hour of trade out, absolutely flat with a negative bias on the Nifty, but along with a lot of choppiness. Let's see whether things improve as we go along with the trade, and statements coming in, on the geopolitics as well as from US, that will be defining the way we move forward. Of course, tomorrow we will also keep an eye out on how action continues on US Fed. So a lot of global action will be important to track, and of course many earnings that are coming in today as well that you can keep an eye out on. Stay with us on Business Today Television as we track the markets for you, and we will of course keep getting the earnings conversations and top market masters guiding you with all the strategies in the markets today.
Several countries